Hi, good morning, everyone. Welcome to today's event on the topic tax dispute resolution for businesses. I'm going to be your moderator for today. My name is Isahaku Ibrahim. I'm tax senior manager in PwC, focusing on tax reporting and strategy. So as I said, the topic for today is tax dispute resolution for businesses, and will be presented by Dominic Knapp. He's the acting head of strategy and research at the Ghana Revenue Authority. And we'll also be joined by Thelma Ashley. They will take time to introduce themselves. Before we delve into the topic, we want to go through the highlights of the 2026 budget. So we'll take about a few minutes just to go through. We know most of you will have heard the budget and gone through it, but just to take a few minutes and go through. And then if you have any question on the budget, we can answer it during the Q&A section. But before I delve into that, I would like Dr. Mr. Dominic Knapp to also introduce himself.
I'm Dominic Knapp. I work with Ghana Revenue Authority. I'm the acting head of strategy and research department, and I'm a tax practitioner, but in the public service. That is all I know about myself.
Okay, thank you, Doc. Thelma Ashley.
Thank you, Isaac. My name is Thelma Ashley. As Isaac already mentioned, I'm an associate at JLD and MB Legal Consultancy, a law firm in Accra. I work with the Financial Services and Corporate Commercial and Tax Practice Group. I am a member of the Chartered Institute of Taxation Ghana, and I hold an advanced diploma in taxation. Thank you.
Thanks for the introduction. So we have the UK GCC here, we have a tax consultant here, and then we have the tax authority here. And then we also have a legal person here. So all your questions will be answered. So would us go through the highlight of the budget, and then just so that we remind ourselves. So we have the 2026 budget. And then we all know that the budget is driven by two key issues: the revenue and the expenditure. So this will drive the policies that the government will introduce. So in 2026, the government intends to raise about 268 billion Ghana cedis from the projected outturn of 226. So in 2025, the government is projecting that by the end of the year, they will have made 226 billion. So this is an 18% increase in the revenue and grants. What does this mean? So if you are a taxpayer, and we are all taxpayers, if the government intends to increase their revenue by 18%, it means a lot. And we all know that inflation is coming down. We are in the era of single digits. So if government is projecting an 18% increase in the taxes, it means that if you do a simple mathematics, there's going to be a real increase of about 10%, assuming inflation is going to stay the same. Then in terms of expenditure, in 2026, government intends to spend in excess of 300 billion Ghana cedis from the projected outturn of 251. So we are seeing that the increase in the expenditure is more than the increase in the revenue. And then, as you know, government has a lot of commitment. And once they project an expenditure, it's difficult for the government to reduce it. Even along the line, we are going to see agitation from labor unions for increase in salaries and all those things. So if government is not able to raise enough revenue to meet its expenditure, what is going to happen? Will they bring new taxes in the mid-year? These are things for us to ponder on. Then, so we'll just go through the key highlights. There's going to be a reduction in the effective VAT rate from 21.9% to 20%. We all know that the COVID levy is being abolished. And then the non-deductibility of the levies is also going to be abolished. So now once you pay the levy, you are able to claim. So it's going to be VAT of 15% and levies of 5%. So the question is that why won't government just make the VAT 20% so that we just charge this as it is, straightforward, not 15, 2.5, and 2.5. And then secondly, the VAT threshold is going to be increased from 200,000 Ghana cedis to 750,000. So I mean, this will inure to the benefit of the micro and very small scale enterprises that they do not have to be accounting for VAT. You realize that you will not have had a lot of taxes in the budget compared to previous budget, where you see about 2 or 3 or 4 taxes being introduced. This time, the government is more focused on implementation. So we'll just take account of a few of the issues and then we can delve into the topic for the day. So the world has changed, and Ghana, the income tax of Ghana is largely source-based. So you are taxed if you derive income and then it's sourced in Ghana. But over time, due to the advent of technology and the digital economy, we've seen a lot of businesses who are earning income in Ghana, but they've been able to avoid the concept of permanent establishments. As such, they are not taxed in Ghana. The only tax that they suffer is withholding tax. And then even that, some of them are able to effectively add it to their prices, so that if there's a withholding tax on their payment, they adjust it, and then the person in Ghana will withhold the tax and pay. Now, government is looking at taxing non-resident entities with significant digital and then economic presence to also pay income tax. How is this going to be done? We are yet to see how it will be implemented. In some other countries in West Africa, they've introduced these rules, but they haven't been able to implement it. For now, there's a VAT on providers of digital service, and that has been going on for some time. But when it comes to income tax, let's see how it will go. So what it means is that apart from the VAT that is borne by the recipient of the service, the companies who are also earning income from Ghana must account and pay income taxes in Ghana. So that means that they will likely have to prepare their income and expenditure in Ghana and pay the taxes. Then The government also intends to simplify and then align the income tax with global standards. It's been a decade since Act 896 was introduced, and there's been a lot of amendment, and I'm sure that taxpayers and tax consultants even sometimes get lost on how many amendments have come since the introduction of the Income Tax Act. Then there's going to be agribusiness tax incentives, and this will likely align with the 24-hour economy that the government has introduced. There's also tax stamps on edible oils. We've had a lot of smuggling from our neighboring countries, so the GRA intends to curb that by introduction of tax stamps. Then we have the airport development fee. This is the new fee that is coming up. Is this going to increase the air tickets? So let's watch out. Then there has been zero rating of VAT on locally manufactured textiles, and this has been going on over and over, and there's a further extension up to 2028. We don't know if by 2028 there will be a further extension, but we hope so that we salvage the locally manufactured textiles. Then I think in the mining sector, there has been complaint about VAT on reconnaissance and prospecting, because at the state of reconnaissance and prospecting, they don't have income to net off the VAT that they are paying. So I think government has listened to the plea, and then the VAT is going to be eliminated. Then, as I said, this year's tax measures are largely implementation, and you will have heard the finance minister complaining about people using or abusing the import declaration forms. So there's going to be a serious monitoring to ensure that people don't take funds out of the country without having importing goods. I'm sure you heard our tax partner, Abeku Jankwansa, saying that when people want to transfer funds, they go to the banks and they are told to complete the import declaration forms. Meanwhile, these are meant for goods at the port and not for services. Also, the GRA is going to launch ITAS, Integrated Tax Administration System. How is this going to be different from the online system that we currently have? But then we hope that it will be an improvement on the current system. Then there's going to be operation of the Independent Tax Appeals Board. It's been over some time now that the law came, but we haven't seen the operationalization of the ITAB. And this is key for today's topic, because at the end of the day, if you disagree with the GRA, before going to court, you have to quote unquote invoke ITAB if you are not happy before you go to court. Then there's also tax cooperation with other countries. So the tax authorities in various countries are now coordinating. So any information that you are sharing with the GRA, they can collaborate that information with the tax authority of another country. So if you are based in France, UK, Nigeria, Togo, and you are sharing information, just know that the GRA can cross-check that information with the one that you are sharing with the one your parent or your other related entity is disclosing in their country. Then the tighten tax exemption and collect overdue taxes. So the GRA is keen on tightening the exemption and then also collect overdue taxes. So if you owe the GRA, you better go and pay early before they come to you. So this is the highlight of the budget in terms of taxes. So from here, we will delve into the main topic. So Mr. Dominic Nab will take over for me. And then please, we have a Q&A sessions. So if you have any question, please kindly jot it down. After the presentation by Mr. Dominic Nab, then we can take the Q&A. Thank you. So
thank you very much. I guess I can proceed.
Sure, yes.
All right, so let me share. Thank you very much, Ibrahim, and thank you very much, my colleague panelists, as well as persons listening to us. Let me just start by saying that I'm happy you have actually premised this discussion on the budget that was just presented. Indeed, if you look at the budgets, government does not intend to introduce new taxes next year. So what it means is that we are actually going to rely on what we have. But the emphasis and focus is going to be on compliance. So GRA has a very Herculean task to raise the needed revenue using compliance methods. Indeed, our taxpayers have actually been so helpful over the years. We commend them, because paying taxes is not so easy. That's a fact. But we have also been able to create, when I say we, I'm talking of GRA, has been able to create the enabling environment to allow taxpayers pay taxes with some amount of ease. What we have done over the years is that we have improved upon the tax landscape by ensuring that we have what they call cashless system. GRA does not collect taxes in our offices. So we don't want to have anything doing with your monies. Go and pay to the banks or other channels, and we would access the money. The rationale behind it is there are certain persons whose expertise has to do with handling money. Our core business is to raise revenue. So we don't have any expertise when it comes to money. We used to record a lot of counterfeit, monies and so on and so forth. That tells you clearly that we didn't have that expertise. So we have ceded that one to persons who have the acumen. Again, we now also operate what we call online filing and online payment. So file your tax returns, don't come to GRA. So now if you go to GRA environment, we now have less congestion. That is very critical. Then we also introduce what we call the ICAMS, that is the Integrated Customer Management Systems. These interventions are all geared towards making the taxpayer very comfortable. And it is also as a result of response based on feedback, constructive feedback that we have received from our taxpayers. Having said that, the taxpayer has also some obligations. What are the obligations? One, to register with the Ghana Revenue Authority. The registration is twofold. We have what we call register for TIN, taxpayer identification number. If you are an individual, run an enterprise, then your Ghana card will suffice as your TIN. It doesn't mean that the Ghana card is a TIN. When you are using it for tax purpose, then that becomes your tax identification number. Otherwise, it still serves the purpose for which government has implemented it. Then we have what we call the tax types registration, where we need to actually tick boxes regarding the tax types that are peculiar to a person. Then we are saying that, yes, once you register with us, then file, let us know your activities. So you file your tax returns with us. Community intends to actually raise assessment based on the evidence that is adduced. Then we are saying that pay if you have to pay. And the last one has to do with disclose your income honestly. So these are the critical roles that taxpayers are required to perform. So you can see that GRA has actually created the enablement, the environment, the efficiency that is required to allow taxpayers to be able to perform their roles creditably. Having said that, we also say that taxpayers have some rights as well. The right to confidentiality, to be assisted by the Ghana Revenue Authority, and right to claim capital allowance and to claim other allowable deductions based on law. Ladies and gentlemen, having said this, now the question is, why constant altercations between Ghana Revenue Authority and the taxpayer? That is what we want to delve into today. So with your kind permission, I would just walk you through the outlines. So we want to look at the mandate of GRA, Commissioner General, then an appellate committee that we have formed, the objection committee, then the taxpayers' objection procedures, independent tax appeals board, as was mentioned by my good friend Ibrahim, then appeals against objection and conclusion. Ladies and gentlemen, the Commissioner General has a simple mandate to administer taxes in Ghana. I didn't say to collect taxes, to administer. So it means that if you are not supposed to pay tax, we will not pursue you to pay taxes. Now, tax administration has to do with the interrelated activities Commissioner General must embark upon to ensure that he's able to achieve his objectives. Because oftentimes, when people are discussing the role of GRA, they limit it to, they collect taxes and pay to the consolidated fund. That is quite narrow. GRA does far more than that. GRA, first of all, has to establish or search for taxpayers, establish a tax base. When we establish a tax base, then we are able to raise an assessment. Then we pursue collection before we pay into the consolidated fund. So you can see that the mandate of GRA is quite broad. To look for taxpayers, that tells you clearly that that is a very Herculean task, because as much as some taxpayers are prepared and willing to voluntarily comply with their tax laws, some are also critically evading the taxes that they are supposed to pay, especially some persons that are operating in the informal sector. That has become very complex because of the neoliberal structure that is being run throughout the world. Now, you would all agree with me that if Commissioner General has to raise an assessment on the taxpayer, it means that the taxpayer has submitted his tax returns. And let me also just emphasize that as far as Commissioner General is concerned, and as far as our laws are concerned, we now operate what they call self-assessment regime. It used to be only in respect of indirect taxes, that is VAT, and then the levies, as well as the custom, duties. But since 2015, we have also ensured that the income tax is also run on self-assessment regime. So you assess yourself, and Commissioner will have to now come in to establish whether what we have done is true or not. And just as the tongue and then the teeth, they quarrel or they fight, but they never get separated. That is how GRA and then the taxpayers are. We raise assessment based on what we think the law is. The taxpayer also has a right to object to the assessment. That right is inalienable. We cannot say that that right cannot be exercised. So, ladies and gentlemen, therefore, I want to say that based on what I've said earlier, that the taxpayer has a right to raise an assessment, to raise an objection on an assessment set by the Commissioner General. That is what we call a tax decision. So the tax decision of the Commissioner General can be challenged. Of course, Commissioner General is supposed to interpret the law and to ensure that he is able to raise the needed revenue. The taxpayer must also ensure that they are able to create value for their shareholders. That is critical. And these are poles apart. GRA intends to raise revenue. The taxpayer intends to also create value for their shareholders. With this at the back of our minds, that means that objection to Commissioner General's assessment cannot be overemphasized. Now, yes, the law has established that if the taxpayer feels disturbed or feels that the assessment does not augur well, he has a right to challenge. But what Commissioner General has done administratively to promote voluntary tax compliance and to ensure efficiency in the tax landscape, we have established what we call the appellate committee, and the area offices really run this appellate committee. And the appellate committee, what is it? It is just a committee set up by the Commissioner General at the regional area offices, just to ensure that they are able to address quickly taxpayers' concerns. And it is actually shared by the enforcement and debt management head. Now, see, if you understand the system or the structure run by GRA, we have at the area office, we have the tax audit, we have the enforcement at the area office. Now, when an audit is done, then the head of audit does not sit on the appellate committee. So when the taxpayer makes a case for review of the tax decision made by the Commissioner General, then these persons are assembled. So we have the office where the taxpayer is. That office manager would sit. Then we have the debt enforcement and debt management officer also sit on it. Then an independent office manager who has nothing to do with the taxpayer also sit on it. Then we have a secretary and then a statistician. In some cases, the statistician serves as a secretary. Now you can see the independence of this committee. Then they review what has actually been submitted by the taxpayer. If it becomes necessary, the auditors are called upon to help with the review. Otherwise, their working papers is enough for them to rely on with the taxpayers, consent to actually provide the kind of opinion that is appropriate. And usually we use 1 week to do that. Again, Commissioner General has also put in place what we call objection committee, of which I am a member. This objection committee is at the head office. Usually when issues are not addressed at the appellate committee level, then it is escalated to head office, and the objection committee would actually sit on it to provide what we call an opinion that is based on law. Now, why is Commissioner General doing this? Commissioner General is doing all these things to reduce cost of litigation and also to ensure that the taxpayer is given justice. The taxpayer is given justice. Now, this is what CG has done based on how he intends to actually run the tax administration in Ghana. Ladies and gentlemen, now, based on the law, so I've just told you what the Commissioner General would do administratively. Now, let's look at what the law has to offer. The Revenue Administration Act is very clear under Section 42. It says that it tells us clearly how the taxpayer can object to an assessment. It says the taxpayer, upon receiving the tax decision by the Commissioner General, if he is dissatisfied, that is critical. It is just not upon receipts or receiving the opinion. If you are dissatisfied, then the law says that you have recourse to actually object to the tax decision by the Commissioner General, because it cannot be sacrosanct. But you must do so within 30 days upon being notified of the decision. And the objection must be in writing, not verbally. It must be in writing. And you must state clearly the grounds for the objection. Why are you objecting? Are you objecting because others are objecting, or are objecting based on some reasonable grounds? If for any reason you can't do so within the 30 days, the law allows an extension. You give reasons and the Commissioner General will yield, to that. We move on. Now, it is clear that when it comes to tax administration, the two divisions, that is Custom Division and the Domestic Tax Revenue Divisions, are the divisions charged with the responsibility of raising the revenue from both direct and indirect, angles. Now, the law says that If you are an objector and it has to do with taxes administered by customs, pay all the taxes before the Commissioner General will listen to you. Pay all before the Commissioner General will listen to you. If, on the other hand, it has to do with domestic taxes, that is taxes administered by the Domestic Tax Revenue Division, the law says that which are the tax types that you have problems with? Those ones, pay 30% before the Commissioner General will listen to you. If you don't have any issue with any tax type, then pay all before the Commissioner General will listen to you. That is the position of the law. However, the law also says that the 30% that is supposed to be paid, it can be varied by the Commissioner General. It can be waived by the Commissioner General. It can also be suspended by the Commissioner General. It doesn't mean that when you apply for the 30%, automatically it must be waived. The Commissioner has a right to either waive it, uphold it, suspend it, or whatever. He has that right to do so. But Commissioner, in exercising that right, must also know that he has what they call the integrity of the tax administration to protect and also to raise the needed revenue. So there must be a balance. Ladies and gentlemen, the Commissioner General is required to actually make a determination. But the law goes further to say that within 60 days, you must hear from the Commissioner General. If you don't hear from the Commissioner General, then assume that he has ignored your decision. That, for me, I think is also not fair. Commissioner General has a right to write. When the taxpayer has written to the Commissioner General, I don't think that the taxpayer should elect to say that once I've not heard from the Commissioner within 60 days, then it means that he has ignored me. That, for me, I think that that law has to be looked at, because it really does not provide that kind of comfort that the taxpayer would want to see. I pick a hole in this area of tax administration. I think that this law here really has been reviewed to make it mandatory for the Commissioner General to respond to every objection by the taxpayer. All right. Now, government is also not oblivious of the cost of litigation, has brought to the fore another layer of dispute resolution. That is by introducing what we call the Independent Tax Appeals Board. The Independent Tax Appeals Board. The name tells it all. Very independent. So this board can be petitioned by the taxpayer. So it means if the taxpayer thinks that his interest, his case, his objection has not been actually responded to appropriately by the Commissioner General, he has a recourse to this the board. Now the board would have to listen to the taxpayer and try to actually address it. The taxpayer, upon not being satisfied with the Commissioner General's response, has within 30 days to appeal to the Independent Tax Appeals Board, otherwise called the ITAB. Now, the interesting thing about this is that the ITAB would have to listen to the taxpayer and provide some response. So GRA will be invited, the taxpayer will be invited, then they will dispassionately review the concern of the taxpayer and provide appropriate responses. Indeed, when that is done, Commissioner must actually abide by the decision of the Independent Tax Appeals Board. So what it means is that the Independent Tax Appeals Board must also live above, reproach, and live above board, must actually provide their services in a manner that the taxpayer will feel very, very satisfied. Ladies and gentlemen, it doesn't end there. If the taxpayer still feels that he has not been appropriately attended to, then he has the recourse to actually appeal against the tax decision by going to court. One beautiful thing about tax administration is that the courts provide some kind of comfort in the sense that the taxpayer will respond to the request from the court. GRA also respond to the response to the court. And they would both have to argue out their case based on law. We have seen situations where in some cases, GRA has lost. And in other cases, the taxpayer has also lost. So if we were saying that every time GRA wins cases, then again, I'm sure we would criticize that kind of forum. But the fact that sometimes GRA loses and sometimes they win their cases tells you that there's independence that can actually be enjoyed at that level. Again, the mechanism that is actually dispensed by the court also tells us clearly that it's an area that can promote voluntary tax compliance. If the taxpayer feels satisfied, I'm sure they would always comply with the tax laws. In conclusion, ladies and gentlemen, when it comes to objection to the Current General's tax decision, it is a right that must be exercised by the taxpayer. That right cannot be taken away, and that right must be respected. But you must do so when you have a reason. Otherwise, when it becomes very frivolous and unmeritorious, it doesn't really help in tax administration. Thank you very much.
Thank you, Doc, for the presentation. So we'll take some legal issues over the past couple of years that we've had at the court. And when the issues go to court, it then goes into the realm of the MyLaws. And then that one, they have to read the law and then interpret. And then for me as a consultant, I don't like to see issues that can be resolved between the taxpayer and the GRA going to court, especially on things that can be reconciled. At times, issues go to court and the judge has to get an independent person to now go through the issues and then do a reconciliation. If you have to go to court, it has to be a matter of interpretation. Does this section apply or not? So we'll take some couple of cases from Thelma. She'll walk us through some of the few cases that have gone to court and then how it turned out. Thank you, Thelma.
Okay, thank you, Isaac. Thank you, Dr. Nab, for that elaborate presentation. So I think we would have to start from the first point of a tax decision. Most of the cases that have been decided over the years, we have seen that it stems from what a tax decision is and the implication of that tax decision. So if we take the Revenue Administration Act, it says that a tax decision is a decision that has been made by the Commissioner General under a tax law. And if you go through the subsections under section 41, we see that it's talking about when a tax decision is made. And for the first part, we see that it says a tax assessment. An assessment is made when it is served on the taxpayer. And we see other decisions also constituting tax decision. I know most times we pay attention to an assessment being a tax decision, but we've also seen in the cases that have been decided that other decisions that may not necessarily be in the form of assessments can constitute a tax decision. So I'd refer to the case of Bishop Daniel Obinim and the Commissioner General. So in that case, this was, I think, in 2020, I believe. In that case, the Commissioner General had served an assessment on the taxpayer. And after about 6 months, they sent a notice for a final notice asking them to settle their tax liability. And the taxpayer still did not get back. So they went ahead to issue a third-party debtor notice. And the taxpayer sought to evoke the jurisdiction of the court, saying that the Commissioner General had not responded to their tax objection. And so they couldn't go ahead to issue a third-party notice. What we saw in that case was that the court was explaining that a tax decision is made at the time the initial assessment was served. And so if the GRA is asking you to pay your liability, serving you a final demand notice to pay your liability, your response to that letter from the GRA does not constitute a tax decision. And so the taxpayer had sought to respond to that second letter from GRA, and on that basis was saying that they had objected to the tax decision, but the court said no, this is not a tax decision. The law clearly, the RAA clearly states what a tax decision is. I also want to draw our attention to the other case of ex parte Efia African Village, where in that case the GRA had withheld some taxes, and the applicant, or do I say the taxpayer, was asking for a refund, and GRA refused to give that refund. And so the taxpayer went to court to evoke the jurisdiction of the court to say that I'm asking for my money, GRA is refusing to give me my money, and so please basically do something about it. And the court went on to explain in that case to say that your request for a refund and GRA's refusal of a refund constitutes a tax decision. And so the law has clearly stated that if it's a tax decision, this is the procedure you need to go by. You need to object within 30 days, just as the process that Dr. Nab has extensively gone through. And so you coming to the courts is basically you bypassing the process or bypassing the procedure that the law has expressly stated. And let me just add that under our regime, or basically when it comes to tax laws, there is what we call the strict constructionist approach, where the court is looking at exactly what the law has said and they are going by it. They are not going to, it is very unlikely that the law has said something in relation to a tax matter for the judge to decide on their own when there's an express statement in the law, whether the Revenue Administration Act, the Income Tax Act, whatever tax law, they are going to abide by it strictly. And so, again, in the Efia African Village case, the court explained that the refusal for a refund is a tax decision. And so you should have gone through the process of appealing within 30 days to the Commissioner General and then following through till the end. I would also want to draw attention to the Sea Drill Operations Ghana and Commissioner General case. Again, if we look at that decision carefully, the court had to decide when a tax decision had been made. The facts of that case are quite straightforward. There were some issues as to the exact date, but basically the Commissioner General had served an assessment on the taxpayer. The taxpayer rose back to the Commissioner General, pointing out some errors. The Commissioner General revised it. Following that revision, there was what do I say, a communication, maybe continuous correspondence between GRA and the taxpayer, until after a certain point, the taxpayer decided to go to court within 30 days of that final decision they received from the GRA. Now, what the court had to do was, at what point was a tax decision made? And as Dr. Nab said, after you object to a tax decision, the Commissioner General makes an objection decision. So once we decide on when an objection decision has been made, your next recourse in those days was to go to courts. Now there's ITAPS, which is a buffer between the Commissioner General and then court. But in the CJO case, the taxpayer went to court after they had received a final notice or a final correspondence from the GRA. And the court also went on to explain that when a tax assessment or an assessment which is titled a final tax assessment is issued by the GRA, that constitutes a tax decision, and time immediately begins to run. So you cannot say you are engaging the GRA on the side, and so you are not going to adhere to the strict timelines that has been provided by the law. And so for taxpayers on the call, for taxpayers, they just need to bear in mind that, yes, the GRA has some measures to engage taxpayers. It is looking to avoid going to court, but there's also a strict timeline that has been emphasized in the CJO case, that the 30 days needs to be abided by. So even though you want to engage the GRA on the side, you should go ahead and file your appeal to now ITAB, or in those days straight to the court. You should go ahead and file your appeal within the 30 days. Because if your conversations or your negotiations with GRA breaks down and it is after the 30 days, you will be denied a right to appeal. And so I think this is where the start of the conversation can be. And as the questions come in, Isaac, I can just chip in with additional thing. Maybe while we wait for the question, maybe let me just add the other aspects with respect to ITAB. Dr. Knapp did mention ITAB, and you also mentioned ITAB, stating that in the budget it was brought up and it is going to be operational in 2026. But currently, we see that even though there is a law that has been passed, which is the Revenue Administration Act Amendment in 2020, that was passed, setting up ITAB as a buffer so that if you are aggrieved by the decision of the Commissioner General, there is a further appeal to ITAB. ITAB isn't operational. And so there is an impasse. Do I go to ITAB, which is not operational, or do I go to the courts? Because the law says go to ITAB first before the courts. What we have seen in practice is that some people go straight to the courts. Others have also filed their appeal at ITAB and is pending. But I will add that the law, which is the Revenue Administration Act, Section 45, has said that an appeal to the decision does not serve as a stay of proceedings or does not prevent the GRA from coming after you for their money. And so what you should do once you file an appeal is to file what we call an application for stay of execution pending that appeal. So stay of execution pending that appeal. And you would usually go to the courts for that application so that you tell GRA that, okay, there's an appeal pending, but I cannot maybe pay you before this decision is decided. So I'm asking the courts that they should just stay the matter or prevent GRA from coming to me after the matter. Once the matter is determined or once the case is settled, GRA can decide to go ahead. If I win to, then it means GRA will not get their money. When it comes to a stay of execution, the court has a very strict approach on deciding whether a stay of execution should be granted or not. So there are several factors, including whether you can be restored to your position if the stay of execution is not granted. So if, for instance, you are saying that the court should allow you to stay GRA from taking their money, one of the questions the court is also going to ask is, what kind of hardship will be caused to you if we ask you to go ahead and pay GRA your taxes that you owe? So there are so many factors that come into play when it comes to the stay of execution. And so you may go ahead, apply to the ITAB, appeal to them, appeal to the courts, but remember that you need to file a stay of execution pending that appeal. And that will also let you understand that when it comes to the court, representation at the courts is by yourself or by a lawyer. But when it comes to dealing with GRA, you don't necessarily need a lawyer. You may do so with a tax consultant, a tax practitioner. You can do so by yourself. You can do that with a lawyer as well. But once the matter reaches the courts, you definitely need a lawyer or you represent yourself. So Isaac, yes, I think that we will make room for the questions, and then once they come in, the discussions will be set.
All right, thank you, Thelma, for the insight. The Seadrill case is certainly an interesting case. The taxpayer is corresponding with the GRA, so they think they are still objecting. They go to court and they are shocked. So, doctor, is the GRA going to stop entertaining taxpayers after the letter is issued, so that you know that any redress that the taxpayer want is the court? Because if I'm still communicating with you, I'm holding meetings, we are still exchanging letters. For me, the taxpayer or their lawyers or their consultant, they haven't exhausted all the process because it is still ongoing. Then you go to court and the court is telling you that no, you should have objected during this time. So for me, it came as a surprise, and I'm still struggling to process it, because what it means is that at what point in time should I be going to court? Should I stop engaging the GRA? So I think though the court has ruled, but I think that case was unfair. Doc, can you just give us some highlight on it?
I thought that matter should rather be dealt with by my good friend Thelma. Because we have won, so if we have won, as far as I'm concerned, it means that we did things right. And also remember that the court does not really, the court looks at the case as it is. They look at technicalities and whatnot. But if you listen to lawyer Thelma carefully, what she said was that as soon as a letter is served, you have 30 days to respond to the decision. If you don't do so within the 30 days, then you are extopel is brought against you. Is that okay? Unless maybe you sort of ask for extension of time. So I think that taxation is nothing but law, as it were. And the law has provided how you can go about it. So if you really do not exercise your right within the time stipulated, and you want to do so after, then obviously I don't think any court will detain you. Again, taxation is about law and order. It is about trying to actually exert your right at the right time. If you fail to do so, I don't think we should actually listen to you. What I can sometimes in the case of the ITAPs, yes, so that's another layer which you can exercise. Unfortunately, I don't know, maybe if Thelma can educate me, the law was passed in 2020, and then we expected that we would have had the tax appeals board running. But yes, the members were inaugurated. They wanted to actually start. I remember I was a project manager trying to get them, a place. We got them a place. Everything was done, put together, for them, only to realize that they needed to go back to court or parliament. Is that okay for certain things to be done? That is what has delayed the whole thing. So, but as far as the law is concerned, yes, it is there. So I don't know whether if you exhaust that with Commissioner General and giving up ITAS operationally hasn't actually started, can you decide to say that, look, I'm waiting for ITAS? I probably would need some education from Thelma, or you can proceed to court. These are the things that we actually need to look at and properly put them in place. But I think some of these things, we should not run away from going to court to test it, so that we are all clear. Because government has provided another layer before the court. So between GRA and the court, there's another layer. And that layer, the law has been passed. So if the law is passed, then we expect that they should be functional. If they are not functional, and it is because government has not provided them the inputs to work, who is the problem? Thank you.
Good. So, Doc, so now that the ITAP isn't functional, and I remember there's a case, I don't have the name offered, the church even mentioned that they should go to ITAP before coming to the court. And then it is not the responsibility of the taxpayer to set up ITAP. That is the responsibility of the government. And then can we also say that, okay, then we hold on to the issues and let government put its house in order, so that if it take a year or 2 or 3 years for the government to operationalize ITAP, then we go through ITAP before going to the court. Because I cannot use, I as a taxpayer cannot use my money to make ITAP operational. So why won't we stay if we are not able to solve the issues at the operation committee? Why don't we wait? That will put a lot of pressure on the government to make sure that ITAB is operational before going to court. Because if you are to follow strictly, and as Thelma said, tax interpretation is strict construction. So if you have to follow the line as laid down by the law, if we get to a point that we can move forward, then we stay there. So the government, that will force the government to operationalize ITAB before we go to court. But now if you are bypassing ITAB and going to court, then it's an issue, meaning that we set up a law that we are not following. So Thelma, as a taxpayer, can I say that, okay, I'm applying to ITAB, it's been set by law. So whether it exists in practice or not, it's been set up by law. So let me hold on, deal with ITAB, if it take 2 years or 5 years before going to court.
So, Isaac, you know, you as a taxpayer have to decide what you want. Because if you are not in a hurry and you believe that if you apply to ITAB and the delay with it not having been set up or it not being operational, it's not going to cause any damage to you or it's not going to be a disadvantage to you, you may just leave the case there as it is. So we have seen that there are some people that take the matter to ITAB, and there are others that have taken the matter right from the Commissioner General to court since 2020, when ITAB was set up. And so some of the courts, like you have said, have not heard the matter because they have said that there's ITAB, so go back and ensure that you go through the right process. Other courts have entertained the matter and heard it through till the end. And so, but what I will advise as a legal practitioner is that because the law has stated that within 30 days you should appeal to ITAB, I think that should be your first point of call. Appeal to ITAB. Because the risk in going straight to the courts is that if you get to the court and the court says, I'm not going to hear your matter, that 30 days might have elapsed. And so you would have missed your right to appeal. Let's not forget that we have said that tax is strictly construed. So even though it might be unfair, you still need to bear the timelines in mind. So I would advise that first, you can file an appeal to ITAB. And then, like I initially said, file a stay of execution at the High Court. Because in the case of Intertech Ghana versus Commissioner General, they have said that the High Court can evoke its inherent jurisdiction to hear stay of execution applications. And so the best thing you can do for yourself as a taxpayer is go through what the law has said, because there's an ITAB secretariat, there are schedule of fees, they have just not started sitting. And you never know, maybe it would have been your case that would have caused them to have the first panel to hear the case. But because you didn't apply there, you have missed that opportunity, gone to court and probably be sent back. So I would advise you as a taxpayer that go by what the law is saying. Go to ITAB first, then apply for a stay of execution at the High Court. Alternatively, what you can also do is to apply or is to file your appeal at both ITAB and the High Courts. If the High Court throws you out, at least you still filed at ITAB, and then you have your 30 days. But there's a risk that the courts might say that there's an abuse of process, because why have you filed your appeal here at ITAB and filed it at the courts? But the truth is that there is no judicial pronouncement on what we should do. So we have to come up with ways that will protect the taxpayer and ensure that, okay, GRA is able to get what it has to get, its funds, its revenue, but we, the taxpayers, should not be at a disadvantage. And so the recommendation will be go to ITAB first, then stay of execution at the High Court.
Thank you, Thelma. So taxpayers and tax consultants be guided accordingly. Doctor, I picked some issues from your presentation. You mentioned the appellate committee at the area office. At what point in time do I engage the appellate committee of the area office before even going to the objection committee? Is it before the report is issued? Because what I know is that when the report is issued, you have to then formally object. So at what point in time do we address the appellate committee?
Yeah, so thank you very much. Yeah, so the appellate committee, as I said, it's just Commissioner General's administrative function, just to ensure the taxpayer is given some kind of, if you like, prompt attention. So there are two ways about going about it. Some taxpayers would write to the Commissioner General. CG can decide to just refer to the objection committee. But if you have to do so at your office, then obviously they will escalate it to the appellate committee. So it depends on how you want to go about it. There are some taxpayers, they think that, look, if they start from their offices where they file, it may take a long time. So they come to Commissioner General Street, and CG would just refer it to the objection committee. Is that okay? Others may also decide to go through the route of their offices. In that case, that one will go to the appellate committee. Now, at the appellate committee, if they are not able to look at it, then they can also make reference to the Commissioner DTRD, and he would also forward it to the appellate committee.
Okay, thank you. And then the extension of time. I know the law provides taxpayers the right to apply for extension, but at times taxpayers are a little bit confused because you get a letter and you realize that you need some time to go through the letter and formally object. But by the time you write the letter and submit to the Commissioner General most of the time is unable to get back to you on time. So I get a letter on the 1st November. Let's say the letter is written 1st November, maybe, and then received by the taxpayer. Maybe by the time it gets to the desk of the financial controller, at times some internal delays happens. And then it comes to your desk, let's say 5th. When you write, and then you think that you will need time to go through your records and provide the necessary information. But when you write to CG, the CG may not respond to you within the 30 days. So you don't know. And then if you write and the CG respond, and it comes after the 30 days, and the CG does not grant the extension, at that time, then your right to object has been lost. So is there a way that the office or the CG office will prioritize this application for extensions so that you want to know if the CG grants you the extension, then you have enough time. But when the CG denies you the extension, by the time you get the response, then the 30 days is gone. So it's like, although it's there in law for you to apply for extension, in practice, you are just unable to apply. So I think the judge need to look at that if they will prioritize those extensions so that there's a certainty. Am I getting the extension or not? That's I need to know. If I'm not getting, then can I get the notice before the 30 days?
Yeah, thank you very much. I agree with you that sometimes decisions taken by the Commissioner delays. I admittedly, yes, that is true. But we have come up with a charter. And the charter has to do with what we call our service promise. So if it is objection, how long does it take? And I believe strongly that ever since we introduced that charter, we have been working, with it. So I may have to refer, I think within 48 hours, such decision should be responded to. But you see, the other bit has to do with our letter, then he moves around. By the time he gets to your place, there's nobody. He comes back. He doesn't even prioritize those correspondences. That can sometimes create that kind of problem. Again, sometimes too, the feeling is that once you have bought it, you follow up and pick the letter. You don't follow up. And the person who is supposed to dispatch it has also not dispatched. So these are cases where we have such delays. But I think that this platform is also very appropriate, as far as I'm concerned, to help us be able to write things, to do things right, or to right our wrongs, if you like. So I'm just going to note this one and follow up to see whether we really go by our service promise to make sure that we respond to some of these things pretty much quickly. And at the objection committee, we meet weekly. So when an issue comes between 9 and 5, we actually look at it. And you would agree with me, PwC have come to our committee several times, where we invite you because we want to hear from you. We want to hear from the tax auditors and be sure that we align and come up with a ruling that would actually be very satisfactory. So you can attest to our efficiency when it comes to some of these things. Having said that, I would get back to Commissioner General regarding what you have said, and then we'll work to improve upon it. Thank you very much.
Okay, thank you, Doc. The other issue that I have is that the taxpayer is required to object within 30 days. However, the law says where the CG does not serve you with a notice within 60 days, you should elect that. You may elect. In fact, the law says you may elect. And I think that provision of the law is unfair. And I've had a couple of officers saying that if they don't respond to you, then it's like automatically they have rejected their objection. I have a different view because the law says you may elect. So what if I don't elect? I have objected. You give me 30 days. I have objected. And within 60 days, the CG hasn't gotten back to me. And the law says you may elect. The law didn't use shall. So, and then once you say may, I also have the right not to elect. So if I don't elect to say that the CG has rejected my objection, should I just stay in wait within like in the next year or two before the GRA comes back to me? I think in the spirit of fairness, the law should be amended such that if I object and within some time frame, it can be 60 days, it can be 90 days. If the GRA doesn't get back to me, then my objection is binding on the CG, because such that the CG cannot come back after that day, because you gave me 30 days. If I miss one day, I'm out of place. And then even at times, as a consultant, sometimes you have to be counting with your fingers, because it's saying 30 days. Some days, some months are 31, some are 30, some are 29, 28, depending on the year. So once you get the letter, you start counting. And then if you miss one day, you are out of place. So why give the GRA unfettered time so that they can get back to you at any time? And then there are instances where you object, and more than 6 months, the authority has not responded to you. And when they respond, sometimes they give like 2 weeks. And you may have even forgotten some of the issues because of the lapse of time. Because maybe as a consultant, you have like maybe over 100 clients at the same time. Then you now have to go back and look at the audit report, go through the objection letter that you, the consultant, have even drafted to kind of apprise yourself with the issues. And you have been given short time, at times like 2 weeks, to respond to something that you have objected a year ago. So I think that there has to be some, though I know you don't have the power to kind of amend the law, but in the interest of fairness, I think the jury need to look at it. Why do you come back to me after a year when I have 30 days?
Yeah, thank you very much, Ishak. I have just realized that you and your firm, you are making so much money. You have over 100 clients and you have to chase. That was what you said. So I'm going to quantify this one and then be able to determine your income and bring you an assessment. Then we can start the objection from there. All right. Having said that, if you listen to me carefully, I think that I wasn't charitable to that provision at all. I was very blunt. I said that that provision is not right, it's not appropriate. It doesn't really create the needed environment for the taxpayer to comply with the tax law. I didn't mince words at all. But there's a preponderance of evidence to show that when taxpayers apply to the Commissioner General, once they don't hear from the Commissioner General after 60 days, they elect that CG, I disagree with you. Then they go to the next level. That opportunity is not lost on the taxpayer. So the taxpayers have that opportunity. You may elect, then in that case, you would have to go by the Commissioner General and begin paying, or you escalate it to another level, which the law allows. So for me, I think that provision in itself is not entirely bad, because it's as good as saying, we have rejected this, but proceed. Is that okay? But once the law says that you should elect, and I believe strongly that the election that the taxpayer would elect will be that I don't agree with you, Commissioner General. And that has always been, so they move to the next, level. And fortunately for us, we have the Independent Tax Appeals Board, quite good news for all of us. So that's an area we can look at. But I haven't said that, to be frank with you, it's not because of this platform. But GRA is taking steps to amend that law, to give Commissioner General the mandate to respond. Because, you see, we are moving away from using brutal force or brute force to collect our taxes, to ensuring that we are able to actually engage the taxpayer and get our taxes. Both would give us our taxes, but which one would create that kind of environment that we can continue to have mutual respect for each other? So that is what we want to do. So that portion of the law, we are looking at it among other areas of the law to amend so that we can have a taxpayer respond to us in a manner that will not jeopardize their business. Thank you very much.
Isaac, I thank you, Doc. I think I would also add on to what Doc has said, even though they are looking to make some revisions with respect to the law. I believe that if we are looking to work together with the GRA, the taxpayer, and GRA, one of the things we can do during this period is to engage the GRA, because you would have evoked your right to appeal. So your 30 days, you have filed your objection to the Commissioner General. Within 60 days, there is no timeline within which the Commissioner General should get back to you. But it does not stop you from trying to engage the Commissioner General on the issues that you have appealed on, because we have seen in practice that there's been times where during that period of engagement, the assessment has come to a point where both parties are happy with. And so by the time the Commissioner General actually decides to issue his objection decision, it is one that both parties are aligned. And so we don't need to go to court, or in this case now go to ITAB. I am also referring to your question on the timeline, saying that the 30 days is too short. In some countries, we have seen a revision of this timeline. So in South Africa, for instance, right now, they have moved from 30 days and now they have a period of 60 days within which you should object. But you have to make sure that within that 60 days, every information that you are bringing, whether computational, anything that you need to be able to make your case to the Commissioner General or to the Revenue Authority, it is together, it is in place. The same thing for Uganda. Uganda has also extended their time to 45 days. So I appreciate Ishak's concern that there are times where the decision or the matter at hand is so complex that the information that we need to put together within 30 days will be too Herculean for the taxpayer. But again, there is a period where you can apply for the Commissioner General to extend. That brings also the difficulty of when is he getting back to us. So there are two sides of it, but maybe we can also look at, since we are looking at revising the Revenue Administration Act, we can also look at the timelines. Is 30 days really reasonable? Is it fair to each party? Looking at the practice so far, can we extend it a little, maybe to Uganda's 45 days, because we would say maybe 80 days is too much. So maybe we can look at that as well in the revision of the law.
All right, thank you, Thelma. The other issue I want us to look at is on the 30%. GRA comes to audit you. In some cases, a huge assessment, and the current interest regime that we have is very punitive, compounded on monthly basis. So you can have a tax liability of about 200,000 Ghana cedis. And when it's compounded, let's say within at 4 or 5 years, you see that the interest alone is at 4 times the principal amount. And this is what the GRA is saying I owe. And this matter, let's say, is yet to be determined by the appellate committee or by the objection committee, or even at the court. And then I have to pay 30% of the principal plus the interest. Can we, why shouldn't I pay 30% of the principal, subject to the objection committee or the court determining the matter, such that if the taxpayer wins, then the 30%, which is the interest, automatically falls off. Because what it means is that the jury has every right to bring up any assessment that he wants. And the taxpayer is compelled to pay 30%. And what I've seen is that even sometimes, whereas you think the principal is fine, but the interest alone can be disturbing. And then when you are paying 30%, although you have the right to ask for a waiver or variation, these things don't normally come. At times, the best you can get is that maybe out of the 30, maybe pay 20% or pay 10%. If I'm arguing on a principle, because you don't go to, let's say, object on the interest, you tackle the principal. Because once the principal goes, the interest goes. So why don't we pay the deposit on the principal, so that once the principal is determined, then the interest will stay or the interest will go off? Are we expecting the taxpayers to let's say go for a bank loan to pay the deposit? Because sometimes you see some of the audit reports, and the amount alone is enough to close down the business. And then tax law, although tax should be interpreted strictly, is still subject to varied interpretations. And even when the matter goes to court, it's not always unanimous, even if the taxpayer wins or the jury wins. So what it means is that whereas tax is based on law, and law is worse. And my understanding, even though with the best of my judgment, may be different from what the GRA will understand. So if that's the case, why not one pay it on pay child principal, and then why the GRA not auditing taxpayers regularly? If it's every 2 years or let's say every year. At that point in time, maybe I have the information, the issues are still fresh on my mind. But sometimes you come in after 5 years, 6 years, or the judge can start an audit. And then 2, 3 years, the audit is still ongoing. By the time they determine the liability, the interest component alone can be 90% or sometimes 80%. Then the taxpayer has to now come in, go and look for money and pay. Why don't we, once again, stick the 30% to the principal? And then also, because the interest regime is very punitive, why won't the GRA do regular audits? So that if you close, let's say 2 years, they come and audit you, let's say every year they come and then audit you, and you close up, and you close the issue. So, and then the government has passed a law that they will not pay interest, they won't pay interest that's compounded. Where the government has to pay interest, it will be based on simple interest. Why is government taking compound interest?
Yeah, thank you very much. Why is government taking compound interest? All right, I'm happy you said government and not GRA. For GRA, we try to...
GRA in this case. GRA in this case.
For GRA, what we do is that we enforce the law. That is what we do. But let me put things in perspective. When it comes to the interest that you mentioned, we have 2 ways of looking at the interest. Interest on the taxes established, the interest on withholding. Is that okay? So we need to just separate the two. When it comes to withholding, maybe PAYE that you haven't paid, or PAYE that you have underpaid, or other withholding taxes that you haven't paid or underpaid. The interest starts from when you ought to have paid, that you haven't paid. But when it comes to corporate tax or personal income tax, once we establish the liability, it is after the 30 days that the interest will begin kicking in. So let's put these things in perspective. But I must say that your concern is actually a concern that everybody has. I am both a tax administrator and then a taxpayer. Don't let us lose sight of that fact. So the GRA staff is a taxpayer and also a tax administrator. But we all pay taxes. In some cases, some have businesses that they run as well, so they are also in that basket. Again, when we also go on retirement, then in that case, we become full-time taxpayers. So we are also concerned. I recall that this matter has even been discussed at even a ministry level, where we had to look at it. At what point should the interest start? Because if you are talking about withholding taxes or PAYE, you are supposed to do regular audit. Then you delay in conducting the audit. You go to audit the taxpayer after 4 years. They now begin to impose interest dating from when you ought to have actually done the audit. That is not fair. To be frank with you, it's actually creating a lot of challenges for businesses. And that we appreciate from our end. But this requires concerted and collective efforts. I believe strongly this platform is one of the platforms that can actually be used to galvanize support for some repeal or some revision of this provision. I agree totally that it is quite inimical, it frustrates businesses, and even emasculates prospect of actually increasing your profitability and employing more. I think that that law really has to be looked into. But having said that, that is where we have to do regular tax health check, just so that you are sure that things are done right. If there's withholding tax underpayment, quickly establish that and go and pay. You see, We need the money to develop this country. You started with the budget, and you mentioned very elaborate kinds of investment government intends to do, but we need revenue to be able to drive it. Otherwise, that will be a fiasco. So if we don't get committed to paying our taxes regularly, that means that government will not also be able to actually unfold its expenditure. So yes, I agree with you that we need to look at it. I also agree with you that our audits are not done regularly. That is also a challenge, but that has to do with the personnel. We need to also know that employing more is also going to be a cost. And when your cost is above a certain threshold, the same citizens will take you on for not looking at your cost overruns. So it's a delicate area that we need to look at. But I think that I want to join the call that that area of interest competition needs to be looked at. Having said that, we used to have 30%. That was imposed straight away, if you recall. But that one, you do the computation, do the mathematics. You realize that the compounding is even less evil than the 30% straight. I have done that computation when I was at LTO. Because we just wanted to look at its impact. Because if you look at it on just on the face of it, you are tempted to think that, oh, the compounding is very, very debilitating. But I can tell you, you do the other mathematics, and you realize that this one is even better. But that is not to say that we can't actually take a second look at the law. That area, we need to look at it. I have done a paper, on it to say that this area has to be looked at. Thank you very much.
All right. Thank you, Doc. It's good that the Bank of Ghana has reduced the monetary the MPC rate. It's now 18% because that's the base that the GRA used in compounding the interest. So taxpayers are praying that rate gets to single digit so that it will reduce the overall impact of the compounding. Before we go to the Q&A session, Doc, is the GRA open to negotiations instead of going to court and then for my laws to determine? How is the GRA open to negotiate? Because sometimes some of the issues, they are just maybe either reconciliation or not, that the two parties are at variance. Is there a negotiation mechanism so that the GRA and the taxpayer will meet? Okay, take this one, I take this one, and then we close other issue. How is the GRA open to that?
Yeah, thank you very much. Let me just say that tax is a creature of statute. Negotiation is not part of it. In fact, in my reading of the tax law, I haven't seen anywhere where it is stated that GRA should negotiate with taxpayers. GRA is supposed to enforce payment. If you are not happy, go to court. That is what it is. But sometimes we try to, we are all trying to help tax administration. So sometimes Commissioner General would have to look at it, okay, can we have this kind of negotiation? That is really not within the remit of the law. That is done so that at least the business does not actually collapse. You get it? But it is not something that we need to really enforce or say that GRA must come to the negotiation table with the taxpayer. It is not within the remit of the law. CG can do it, but if he does so because of a sense of humanitarianism. But it's not doing so because the law actually requires that it should be done. We have had situations where the matter has gone to court, taxpayer has taken GRA to court. Usually GRA does not take taxpayers to court unless in some cases. But it's always the other way around, where the law has asked that the judges or the courts have asked that, look, go and do this simple reconciliation and come back. So we have had that kind of situation. But again, if let's say the issue has to do with reconciliation, then obviously we can all yield to do the reconciliation before we can start with the arbitration. So that is how it should be looked at. I've had some challenges, let me confess, sometimes with some staff of GRA, that you go to conduct audit. The essence of the audit, going to the taxpayers' system, is to be able to ask questions, get appropriate responses, and agree with the taxpayer. This is what it is, and this is what the position is. Much discussion is not done. Even in some cases, you haven't had any discussion with the taxpayer. Then you come and write and raise those things as issues. Now, the taxpayer is not even aware where it is coming from, because with time, they may not even remember, the kind of engagements where this issue has come up. So it becomes a challenge. It's like, okay. So for me, I have always said that as much as possible, when we go to do audit, you're on the taxpayer's premises. Ask all the necessary questions. Any issue that you want to take on board as an issue that will create liability, let the taxpayer know in advance, and let the taxpayer sign that these discussions have taken place and he has agreed to it. Is that okay? Before you begin to commit it to writing. Otherwise, you haven't had any detailed discussion with the taxpayer. You have taken the issues up, you have written, and the taxpayer is in a quandary regarding what to do and even how to actually get help. That actually does not augur well. But that is also something that we've been talking among ourselves, just to ensure that we are able to create the necessary environment for taxpayers to be able to do businesses. Remember, if there's no business, there's no GRA, and I will not get paid. So I need businesses to do well, so that GRA would stay in business, and I also get paid. Thank you.
Thank you, Doc. So we are now in the Q&A sessions. So if you have any question, please kindly raise your hand. Doc is here to answer your questions. If there are legal aspects to, we have the legal person here, and I'm also here. If you're not, if we don't have the exact answer, we can take it up and get back to you. So please, if you have a question, please raise your hand.
Okay, Isaac, while we are waiting for the questions, I will want to chip in with the comments on negotiation with GRA and Doc's take or his position as well. The law does not provide any requirements for GRA to negotiate with the people. And he's very right on that. We've seen in other countries that, for instance, Kenya, South Africa, Uganda, they have alternative dispute resolution procedures for tax, so that it allows the taxpayer to negotiate, appoint a mediator who sits between them and the tax authority to be able to decide on the matter. Maybe going forward, Ghana can look at these practices and adopt it. Because what we have seen with the courts processes is that sometimes the cases are not decided on their merits. Because as you would know, in courts, it is procedure. So if, for instance, you don't come right, if, for instance, you don't do what you are supposed to do before you appear before the court, it can be thrown out and your case would not have been heard and your right to objection would have been lost and the taxpayer will be aggrieved and there's nothing that can be done about it. But if we consider some of these alternative dispute resolution procedures, then before the person or the taxpayer, the aggrieved taxpayer, decides to go to court, they can look at engaging the GRA directly. And in that case, the GRA cannot say, I am not compelled by law to deal with you, because there will be a law that says that you should be able to entertain the person if you are asking for this alternative dispute resolution, or appoint a mediator to be able to sit in. What we have seen aside courts is arbitration, which we see with the petroleum agreements and then the mining agreements, because those ones are included in their agreements and those are ratified by Parliament. And so they are able to evoke arbitration. Arbitration is seen as one of the alternative dispute resolution procedures under our acts. We have the Alternative Dispute Resolution Act 2010. So there's this law, but it doesn't expressly state that GRA should use it in this process or in this manner. And so we can just learn from other countries, get an alternative dispute resolution procedure for tax purposes. And we would see less and less matters going to court, particularly with ITAB also coming in. And I believe that we should be able to resolve a lot of these issues and the courts should be freed up, because even without tax disputes, we know that our courts are choked. with a lot of matters. So if we want disputes resolutions with respect to taxes to be resolved rapidly, these are some of the measures I believe that we can look at. Thank you.
Thank you, Thelma.
Thelma has been very selfless. She doesn't want to be paid so much to litigate for taxpayers. So it's an area we have to look at, actually. To look at our law, we have what we call compounding offenses, where when the matter is in court and the taxpayer feels that, look, they are getting it wrong or they are in the wrong, they can approach the Commissioner General and tell the Commissioner General that, look, they are wrong, and CG would take it out of the court, for redress. So I want to say that, yes, I agree with Thelma. It's an area we have to actually explore and probably provide it as part of our arrangement. But again, it shouldn't be subject to abuse. Sometimes you know that you are supposed to pay taxes, but because that route is there, you want to use it to unnecessarily delay processes. We need every person to build our nation. Thank you very much.
All right.
Thank you, Doc. It was a very important point Doc raised, because I was going to draw each and every one of us our attention that under the Constitution, Article 41, it says that we have a duty as citizens to declare income honestly and to satisfy all tax obligations. So it is actually a constitutional obligation on all of us. So if we think that we want to use these routes to beat the system, then that is not an unexpected behavior of dutiful citizens in the country. Thank you.
All right. Thank you, Thelma. There's a question from Juju Bafo. Say, after an account has been garnished by the GRA, does the GRA issue a closeout letter? This goes to Doc. After an account has been garnished by the GRA, does the GRA issue a closeout letter?
Yeah, so as part of our enforcement procedures or processes, we can issue a garnishee order. Now, a garnishee order actually has to do with the fact that if you have money that is owed you by a third party, and we are able to identify, in most cases, the banks, we write to the banks and ask that they should pay those monies to us. But so if the right amount has been paid, yeah, of course, that becomes your tax payment. That ends the matter, and we are at peace with you. But when it is not up to that, then that becomes a problem. In some cases, I must say, strangely enough, when taxpayers get to know that GRA is in the process of issuing a garnishee order, they go to empty their accounts. So we get there's nothing. Are you getting it? So once there's nothing, we are unable to get anything. The payment has not been made, and that liability will stand. But you see, I have always said that if for any reason you don't have money to pay because of the kind of accounting systems that we run, a lot of businesses sell on credit. If you sell on credit, yes, you may have made profit, but that profit has not been translated into cash. So you may not have the money to pay. GRA understands this, or Commissioner General understands this. You only just need to write to the Commissioner General. This is a situation, so that they can give you some elbow room to reorganize yourself, but not communication. You see, if you don't communicate, how do we get to know what is actually happening to you? Remember, we want you to be in business so you can continue to pay the taxes. If you are not in business, we are worried. Thank you very much.
Okay, thank you. Please raise your hand if you have a question. Yeah. Okay, I think Jojo has a question again. Let me unmute him. Let me see if I can mute him.
Yes. Hello.
Hi.
Yes, I think my question was not answered. My question was, after the account has been garnished and the full amount has been taken out by the Ghana Revenue Authority, does the GIA issue a closeout letter? That is my question. Thank you.
Okay, thank you.
I don't understand when you say closeout letter. The point is that you owe GRA. They have issued demand notice. You haven't come to pay. They have identified a third party who owes you. They have written to the third party by way of garnishee order. The money is paid, liquidated. That ends the matter. We don't need to issue a letter that everything is over. once the garnishee order the payment is made, we revoke the garnishee order. And that ends it, so that it doesn't affect your future deposits. So but if you think that we need to write to you, you can get in touch with us. We'll give you a letter to show that once upon a time you owed, and we had to use some measures to get our money.
Yeah, I think even during the normal objection, once they issue a letter and the taxpayer pay the amount, the GRA will not write to you again and say this is closed. So once they give you a liability and then it's paid, that ends it. So you should have the evidence for the payment. Jojo, are you okay?
Yes. So the reason I'm asking these questions, after the garnishment, we followed up with our STO severally, asking for a closeout letter, and still that letter was never issued. That like the normal Ghanaian adage, and actually, no problem. But this same audit period, say from 2019 to 2021, other GRA officials are coming back to audit that same period, that the account has already been garnished after the audit. And after the audit, there was no closeout letter from the GRA. That is the concern I'm raising. Thank you.
I think that we need to look at his question in perspective. You see, sometimes as a result of activity that is conducted by the tax office, per maybe desk audit or based on the ledger that has been shown, the taxpayer owes. They now place an garnishee order, then they get the money. It doesn't actually preclude GRA from conducting audit. So there are two things. It's like we have taken our money. Yes, but that is on account. An audit is what gives the closure. So if an audit has been conducted, again, sometimes an audit is done, and we may have some fresh information that may not be available to you. So when we have that information, we may conduct an audit again. Is that okay? So as for audits, please, we may not tell you what it is. Sometimes we get referrals. Sometimes some information, gets to us, and we have to act on it. Sometimes we have whistleblowers come to us to give us information that we didn't consider. So, and sometimes workers at that place are probably not treated well. They come to give us information. So when we have this information, it doesn't mean that the audit cannot be reopened. So I don't know maybe we may have a discussion off the camera. Then you tell me what exactly it is. I can get in touch with the office and find an appropriate answer for you.
Thank you, Doc. John has his hand raised up. Let me unmute him. John Atu, you are live. John Atu, please ask your question.
My question is that with the DEX audit, okay, GRA for my units, they've not been able to conclude, but they are asking me to come for a review and then to know the reports that they have made. I want to know, is it another practice that is now coming up that they are not interested to give me the draft until I am there personally to look into it? Because whatever thing they want us to discuss, I do not have the right to give a response until I have fully looked into it. But they keep on inviting and asking me to come to the place. So I would like to know, is it a new practice, or is it something I myself have to go there in person to go and conclude? Thank you.
Yeah, thank you very much. I think that it's an opportunity for you to meet with them and then get to know what the issues are before a draft report is issued. If you ask my candid opinion, I think that this is rather more humane. Otherwise, if they issue a draft report, is that okay? Then you would have to respond with some evidence. But when you go, the 50-50 areas, is that okay? They can easily just drop them without anything. Is that okay? But if you don't have the time, you can also ask them to give you an observation. You can look at it and respond. It doesn't matter, really. It's not something new. It has been done, just that it's not conventional. Is that okay? Yeah.
Kojo Apieji, Please ask your question.
Good morning. My question is simple. It's quite different from what you're speaking about. It's like right now, you people during the webinar, you have a tax consultant on the panel, which is you, and you have a tax lawyer also on the panel.
Do I consult a tax consultant or do I consult a tax lawyer? What do you do? How are your duties different from each other? Do you do the same thing? Do you tackle the same thing? The knowledge you as a tax consultant you have, is it different from what the tax lawyer has? So I just want to know the difference and the distinction between a tax consultant who works with maybe a big four or a tax lawyer who works with a law firm, and how I can relate with you in terms of consultancy.
Okay, so this is so tax consultant. So it's a broad issue. So a tax consultant can either be a lawyer or an accountant, right? So, but basically, you have most tax consultants being accountants or chartered tax practitioners. So they help you with the advising based on the law, doing the computations, filing, assisting with objections and everything, which the lawyer too can do. The only difference is that when it gets to court, a tax consultant who is not a lawyer cannot represent you in court. So he has to step back or be at the background, and then he may assist the lawyer. And whatever the tax consultant too is doing, the lawyer can also do, can assist you with filing your returns, advice and everything. So let's say in this case, the only thing that the lawyer can do that the tax consultant who is not a lawyer cannot do is to represent you in court. But these days, you will see most tax consultant or chartered accountant also studying, also doing law. So when you get someone who is a consultant, let's say who is a chartered accountant or chartered tax practitioner, and then who is also a lawyer. So what it means that person can take you all the way from filing your returns up to the court, up to going to court. But if a tax consultant is not a lawyer, he can do everything for you, but when it has to go to court, he cannot go there unless you see Thelma. She can go and do my lord, my lord.
Okay, thank you.
All right, thank you. Please, you have we have that few minutes to go, and then you have you have the authority here, you have a lawyer here, you have the tax consultant here, and you get free advice. If this closes and you come to Thelma, she might invoice you. And you come to me, I might send you an invoice. So we just have a few minutes to go. If you have any question, please ask. Otherwise, anything after this one you may have to pay some few cedis. Our time is almost up. And then I want to thank UK GCC for putting together this event, and then also thank Dr. Tom Knapp for the insightful presentation. So please, if you have any question, you can get our contact. My email address is, as you see the name, isahaku.ibrahim@pwc.com. Maybe Thelma will also share her email address. Or if you are not able to get us, you can contact UK GCC and they will give you our email address. I can see Mora Amevoji. You are unmuted, Mora.
Thank you very much. I wanted to ask, following the reading of the budget, we see that there have been some changes in the tax landscape in Ghana. I wanted to know if when you're advising clients, you should advise them based on the new things that have been read, although they haven't been specifically changed in the tax laws themselves, particularly because Ms. Ashley mentioned that the tax laws are interpreted strictly. So can you advise that, there's been a change per the budget, or you should just stick to what is in the Act? Thank you.
Okay. If I get you right, so if you're advising your client, the law is not effective now, but then you need to let them know the current position and the position that will be effective from 2026. So if somebody asks you a question on VAT and the levies now, you have to let the person know that this is the position of the law now, and then effective January 2026, this will be the law. So the new changes will apply from January 2026. So you have to let the person know. If you go and tell the person that the effective VAT is now 20%, it's not right, because the COVID levy and the decoupling of the levies are still effective now. They will expire 31st December, and when the new law takes effect, that's when you apply the law. So even as a consultant, if there's a bill in Parliament and not yet passed, you have to let your client know that this may happen. But if they've passed the law, then the law has been passed, but this will be the effective date. I think there's some question on the Thelma, do you have anything to add?
Yes, Isaac. So I wanted to add that even when the law has been passed by Parliament, it has to be gazetted. So not just passed and signed by the president, it has to be gazetted for it to be effective. But we've also seen times where even though it's been gazetted, the GRA, particularly with respect to tax laws, the GRA has said that maybe the effective date of implementation may be a specific date after when it has been gazetted. So the law being passed or being signed or assented to by the president is not enough. It has to be gazetted. And when gazetted, the implementation date may well be after the gazette dates. Thank you.
Thank you, Thelma. And we've seen some laws being, although they are gazetted, but due to operational issues, the GRA may come and say, okay, they will start applying the law from these dates, as to whether that is legal or not. But then you have to also know that this is the effective date that the GRA is starting to operationalize the law, so that when they come for audit, you can show them. Because I think a law was passed some time ago and was supposed to start 1st January, but the CJ said it's January because they are yet to put their systems in place. There's a question from Daniel Kofi Bimpo. Please, what may constitute or what are the components of tax assessment by GRA or CG? Doug, so what are the components of a tax assessment by GRA or CG?
Yeah, thank you very much. Yeah, so tax assessment has to do with the taxpayer estimating their assessable income, estimating their chargeable income, and estimating their tax payable. So the other things have to do with the fact that if it is come from the Commerce General, there must be a signature authenticating that it's come from the Commerce General. But if the taxpayer does so, then the taxpayer who has to sign, indicating that this is actually a self-assessment. Otherwise, those three things are really what should be captured.
All right. Thank you very much. Our time is up, but we are still open up to questions by email, or if you want to come to the office, PwC Towers at Cantonment, and then any further questions can be sent to Thelma or UK GCC, and they'll forward the questions to us. Thank you, UK GCC, Immaculata, and the team. Thank you, Doug, and thank you, Thelma. Thank you very much.
Thank you very much.
Thank you.